Welcome to Gladstone Associates Provident. We are excited to bring you our weekly report with the latest news and updates in the financial world. In this video, we will share relevant information about the global market, investment strategies, and other topics of interest to our clients and followers around the world. Last week saw plenty of movement in the major benchmark indices, which closed with solid gains, with the S&P 500 index reaching its highest intraday level since mid-August 2022. Meanwhile, the tech-heavy Nasdaq Composite Index posted its sixth consecutive weekly gain and reached its best level since mid-April 2022. However, unlike in recent weeks, the rise was broad-based, with strong gains in both value and growth stocks, as well as small caps. It should be noted that markets were closed on Monday for Memorial Day. Let's start with the debt ceiling deal. The White House and Republican congressional leaders reached an agreement to raise the federal debt limit and avoid a default on the government's obligations. In economic data, April job openings beat expectations, reaching their highest level since January with 10.1 million job openings. In addition, March's data were also revised upwards. As for payrolls, 339,000 jobs were created in May on Friday, well above consensus expectations of around 190,000 jobs. However, the details of the report suggested a possible cooling of the labor market. The Institute for Supply Management, ISM, showed a consecutive monthly contraction in industrial activity, but it is encouraging that supply and input prices have contracted rapidly, defying expectations of a rise. These positive inflation signals have led to lower long and short-term Treasury yields, thanks to the finalization of the debt ceiling agreement. In the investment-grade corporate bond market, new issues, supported by redemptions, coupon payments and auctions, have strengthened prices and benefited the high-yield bond market. In addition, trading has reinforced risk market behavior. Although the primary market has been quiet, trading is expected to pick up next week. We have also seen an increase in buyers in the bank loan market, driven by the risk rally and the focus on employment data.
In Europe, the Stoxx Europe 600 index was little changed, recovering from losses due to slowing inflation in the euro area and the passage of a bill in the US Senate to suspend the government debt limit. Major equity indices were mixed, with the UK's FTSE 100 and France's CAC 40 declining, while Italy's FTSE MIB and Germany's DAX gained. In May, inflation in the euro area slowed to 6.1% year-on-year, below estimates, while the underlying rate stood at 5.3%. SC President Christine Lagarde stressed the persistence of high inflation and the need for further interest rate hikes. The minutes of the May meeting revealed that most policymakers supported a slower pace of rate hikes, but expressed their intention to continue tightening monetary policy. Business confidence in the UK fell back to its long-term average level of 28%. After 3 months of increases, UK businesses surveyed also expressed their intention to raise output prices and wages in the coming year. Although they expect the pace to be more moderate than in the previous month, price increases are expected to be 5.1%, down from 5.9% in the April survey, while expected wage increases are 5.2%, down from 5.4% in the previous month. In China, equities rose significantly after the US Senate passed a bill to suspend the debt ceiling, removing the risk of default and boosting investor confidence. The Shanghai Stock Exchange and CSI 300 indices rose in local currency terms, while Hong Kong's Hang Seng recovered from 6-month lows. However, in China's manufacturing sector, the official Purchasing Managers Index MI showed a contraction for the second month in a row, as new orders and exports declined. China's real estate sector recorded a 6.7% increase in new home sales by major developers, according to data from China Real Estate Information Corp. However, this represents slower growth compared to previous months, when gains exceeded 29%. These results reflect China's gradual recovery from the pandemic, despite the stimulus measures implemented by the central and local governments to strengthen the country's real estate sector until the end of 2022.
Thank you for watching our video. If you would like to learn more about our services, please feel free to contact us at Gladstone Associates Provident. Also, you can follow us on our social networks to stay up to date with our latest news and updates.